Hey, what's good, y'all? It's Dylan back with another lesson. Let's get straight into it. For those of y'all that's watching and paying attention, don't just draw supply and demand zones. I'm going to give you 6 candlestick patterns that will make those zones high probability. Let me start off with my first one. This is my favorite, the bullish engulfing pattern. A bullish engulfing pattern is a 2 candlestick pattern that signals a potential shift from a downtrend to an uptrend. So how do you recognize it? You're going to see a smaller bearish red candle indicating a downtrend, and it's followed by a larger bullish green candle. So the the big green candle is bigger than the red candle at the zone. The body of the bullish candle completely engulfs the body of the bearish candle. It's bigger. So what does this mean? This pattern shows that buyers are overpowering sellers. It's a clear indication of that. So it's also an indication that the price is about to reverse. It's a good signal to consider buying or closing short positions. Here's an example of that. So y'all see how we have the smaller red candle at the zone? As we approach the zone, we got this small red candle, and then boom, we got a big candle which closed. Common sense should tell y'all that this is signifying that buyers are very aggressive and price wants to go up. So this is how we would enter from this zone. That's the bullish engulfing bar pattern. So now we're getting into the bearish engulfing pattern. It's basically a reverse. So a bearish engulfing pattern is a 2 candle pattern that signals a potential shift from an uptrend to a downtrend. How do we see it? How do you recognize it? In this example, it's a smaller bullish green candle indicating the uptrend, and it's followed by a larger bearish candle. The small candle is green and the bearish candle is red. It overpowers that green candle. So what does this mean? This pattern shows that sellers are overpowering buyers, indicating a potential reversal of an uptrend. It's signal to consider selling or closing long position as prices may drop. Example of a bearish engulfing candle. This is also one of my favorites from supply zones. So y'all see how we got this major sell-off, and then we get a retracement back into the supply zone, and we get this huge red bar. Doesn't that just look attractive? Every time I see that, I get to crying. You know what I'm saying? Well, I don't cry. No, I take that back. What's a step below the tears of joy? Just a step below that. You know what I'm saying? Not quite crying, but almost. So when I get this major sell-off, that's an indication that price just wants to shoot down and go my way. And usually when I see this candle, this pattern, it works out at least like 80% of the time. It works out. Like every time I get this pattern, I know I'm about to win a trade. That's how confident I am in taking that. Now we're on the pin bar pattern. So a pin bar candlestick pattern is a single candle with a long wick, a tail, and the body on the wick of the candle. The body on the candle is real small. So that's how you recognize it. And what does this mean? The long wick shows that the price tested a certain level but was quickly rejected, indicating a potential shift in the market. So when we see pin bars, that's like a strong rejection. Like, I love pin bars as well. I love pin bars so much that I dang near want to put my whole account towards that trade. I'm just playing. I never would do that, but that's the feeling you get when you see a pin bar. For those of y'all that trade, y'all know what I'm talking about. But for the beginners, hey man, y'all gonna learn. Just keep trading. Bullish pin bars suggest a possible upward reversal after a downtrend, as buyers have overcome sellers. And the bearish pin bars, they indicate a potential downward reversal after an uptrend as sellers have overpowered buyers. Here's an example of a pin bar pattern. So y'all see is this gap where the institutional sellers are. I'm so used to bull markets, but this is where the institutional sellers are. You see how we, danced around, yada yada. We came up, boom. That's what that candle. Every time you see that candle, think of just think of that when it closes. So when you see this candle, it's a strong indication that price is about to reverse. These type of candles, I have little to no drawdown. These can When I enter these candles, bruh, price goes my way almost instantly. And I love that. I love trades like that. Where just price is just you get your confirmation, get in, boom. It's no drawdown. It's not playing around and yada yada. Like you're scared and everything. None of that. This this pattern gives so much confirmation. It doesn't get any better than this. But this is the pin bar pattern. Okay, now we're on to the morning star pattern. So the morning star pattern is 3 candlestick patterns that signal a potential bullish reversal after a downtrend. Think of it like a morning star appearing in the sky, signifying the end of the night, which is the downtrend, at the beginning of a new day, which is the uptrend. So how do we recognize this? So the first candle, it's a long bearish candle, red or black. Let's just say red, continuing the downtrend. This shows sellers are in control. The second candle, which should be in the demand zone when you see this type of pattern, it's gonna be a small body candle. It could be a bullish candle, or it could be a bearish candle, or it could be a doji that gaps down from previous close, indicating indecision and a potential shift in the market sentiment. It's an indecision candle. Like that candle, when you see that candle, just think that the market is just balanced. Like it's indecisive. Like they don't know whether they want to go up or down. And usually when you get a doji candle, you just want to wait for the break of the high of the candle or the low of the candle. The third candle is a long bullish candle out of the zone. And this is where people tend to buy. I'm gonna get into that later. I'm about to show y'all the example. So y'all see how we got this long red candle into this demand zone where institutionals are, where they first bought the market, where they first pushed the market very strongly. So look, we get in the zone, then we get a doji, we get an indecision candle. When you see this candle in the zone, these are money too. When it breaks above, I want you to get in. You don't have to wait until the candle closes because your stop loss will be huge, but you can get in on the break and kind of anticipate it to keep going up. So do that, man. And I'm telling you, bro, like these patterns be hitting, man. These patterns that I'm showing y'all today, they hit. You're gonna see. You're gonna see. Just keep trading. So this is the morning star pattern. And the evening star pattern is basically reversed. So y'all could pause the video and read this. It's just basically reversed. This is the evening star. So you see the this is a supply example. And you're going to see the evening star pattern in supplies. When you think evening star pattern, think of supply selling. When you think morning star, think of demand buying. You see how we got this big green candle into the zone, then we get to the zone, then we get a push down. And this candle price pushed down, but it came up and it stopped right here. It closed right here in the middle. This is not exactly the middle, but it kind of is. But it left a wick in the zone. Then once we broke the low, I want you to get in. Like these patterns hit. When you get a doji at your zone and a break below, get in, sell, sell. I'm telling you, man. Like, I'm telling you, man, this is gonna, hey, they be hitting, man. Not every supply and demand zone has these patterns, but when they do, bruh, I'm telling you, the win rate is high, very high. What is an inside bar pattern? It's a two candle pattern where the second candle is completely contained within the high and low range of the first candle, also known as the mother bar. How do we see it? So the mother bar, it's the first candle, which is generally larger and sets the price range for the pattern. So it sets the tone for the pattern. Inside is inside bar is self-explanatory. It's inside of the mother bar. Inside bar indicates a temporary pause in the market. So think of when that big mother bar and then we get a bar inside of it. It's like a pause. Just visualize that real quick before I show you the example. It's like a pause. Big candle, then you get a little candle, a smaller candle inside of that candle. It's like a pause. It suggests that buyers and sellers are in a balance or the market is consolidating after a significant price move. So what does this mean? An inside bar often precedes a breakout where the price breaks above or below the range of the mother bar, indicating a potential continuation or reversal of the trend. You see, this is the mother bar. So this is a supply example. You see the mother bar is it's a big bar. Then when this closes, we get a bar inside of this bar. And when you see this, just think of it as a pause. When it breaks below, get in, strike. I'm telling you, man. Like it's this pattern, I'm giving y'all these patterns for a reason. I know they hit. I've tested them. 90% of my trades, I get a representation of these bars. Like they show up in 90% of my trades, I'm telling you. So they hit, man. They hit. That sums up the video. Shout out to whoever made it to the end of this video. If you liked it and you found it helpful, please like, comment, subscribe. I really want to help people, man. Like, I started this channel because of that, and I want to simplify everything. I hope this video was real simple to you and it helped you a lot on forming your plans and making you a better trader. And I also have a Discord. Link is in the description if you want to join. I post my daily trade ideas. I also go live. I do live trading on there. I also do weekly lives, weekly recaps, Q&As, anything that you could think of that would help a new trader or a trader that's trying to better their system, I do. So on that note, I'm out.